Yeah, so welcome to the Morgan & Co. research webinar on the impact of the Russian-Ukraine conflict on the Zimbabwean economy and also on the equity markets. Of course, we've been following the global headlines in terms of the conflict in Russia, but within the Zimbabwean economy, we've seen a number of developments panning out in terms of price level risks that we're seeing, especially with the oil prices. Also seeing the price of maize also going up. So the focus really of this webinar is to sort of bring about some insights on the conflict itself, the political economy, but also give insights around strategy for investors on our equity markets. So of course, we've got a guest with us, Honorable Christopher Muchangwa, former ambassador and also advisor to the government of Zimbabwe. So the manner in which we're going to conduct this webinar is quite simple. It's going to be an open discussion or sort of a panel discussion whereby we'll pose questions for the ambassador, and then we can discuss as we go. But also, the second part has issues to do with the economy and capital markets, which will be covered by the analysts at Morgan & Co. So I myself, my name is Batanai Matsika. I'm the head of research at Morgan & Co. With me are our analysts, Tafaram Tutu, Cornelius Mubi, and also Tinashe Makamure and Gabriel Majojo. They'll be helping us also tackle some of the key issues, especially around the equities market and the strategies going forward. So just to kickstart the conversation, Honorable Christopher Muchangwa, the first question is, of course, what is the government of Zimbabwe's position with regards to the conflict between Russia and Ukraine? Can you just give us sort of some perspectives or some background information on where we stand in Zimbabwe with regards to this conflict? Over to you, Honorable. Yeah, Honorable, you can just unmute yourself and then go ahead.
Yeah, we've historically been very close to Russia. As the former Soviet Union, they stood foursquare with us in the anti-colonial fight leading to our independence. Indeed, about 20 to 30% of our generals from the Cyprus side have a Soviet background. The other ally being, of course, China, which also decided to abstain. So from the birth of our state, of which the backbone is the Zimbabwe Defense Forces, we have been close to Russia, and politically we have been. So when it came to the vote, we had, of course, to choose friendship over all other considerations. But we also were conscious of the fact that Ukraine is a sovereign country, and there were issues about the United Nations Charter being violated when a sovereign country is attacked. So we felt that it was more important to bring the two sides, Russia and Ukraine, together. So a neutral position was more amenable. But there's also a burning issue of how Russia vetoed a United Nations Security Council resolution in 2008, when the Western countries, particularly Britain and America, wanted to bomb Zimbabwe to toast as part of the post-Soviet sense of triumphalism by Washington and London. There was a trade-off. You support us to fight against Saddam Hussein. That was Bush to Tony Blair. And then Tony Blair says, okay, I have a quid pro quo. If I support you, there's a country which I like very much, is former British Empire. It's called Zimbabwe. The Black Africans defeated our army there, the Rhodesian Catspaw of our army, because of Soviet and Chinese support. can you also help us, bomb that country into submission? So that was the deal, but Russia decided to veto, and so did China. So we owe it to Russia that we were not turned into Iraq. So these are the considerations which played. So our relations with Russia are very close from that point of view. So that is the reason why we feel that we needed to abstain rather than criticize Russia.
So thank you very much, Honorable, for those insights. So the next question will be, of course, under the guise of the Russian-Ukraine conflict, we're seeing tension between China and Taiwan actually growing. So what is the outlook of that conflict, and how do you see it affecting the Zimbabwean economy, even of course that we are sort of aligned to China as a nation?
I don't think that, I'm not foreseeing at the present time any major issues concerning Taiwan between the United States, unless, of course, the United States continues to have an aggressive posture in defending Taiwan, which is really part of China, which America accepts as part of China, but it's just that America, because it feels powerful, it is being egregious. The same way America was abusing the relationship between it and Ukraine to begin to threaten Russia by stationing troops, and making Ukraine become a member of NATO. Now there is a debate going on with the United Nations. America had even placed biological weapons in Ukraine, to threaten Russia. So it is really the Americans at their warmongering best who have been provoking these situations. I think Russia snapped and said enough is enough. But I also want to bring a very salient point. You got to look at Germany. Germany is not keen on what America has been doing. They are the third largest economy in the world. America is provoking confrontation within its neighborhood. And this is very unsettling for the third largest economy in the world, that there is war in your backyard, and America was trying to prop up Ukraine as a counterweight to both Germany and Russia. That's, of course, is unacceptable to those two major powers of European history, Russia and Germany. So you may be surprised. There may be a certain feeling of relief on the part of the Germans that somebody has finally stood up to America in the European power play. Remember, the Germans and the French refused to accept NATO, to accept Ukraine as a potential member of NATO in 2014, when America so decided they didn't want it. So I think you need to be conscious of that. And I want to quote, there's somebody called Hastings Lionel Ismay, who was the first Secretary General of NATO. And this is his quotation. He says, NATO's purpose is threefold: keep America number one, contain Russia, which is the Soviet Union, and keep Germany down. So, Germany may have a certain sense of relief. And the cost of all the economic measures being taken now by the West, Germany bears a disproportionate burden, because they are friends of their neighbors with Russia. They need Russian gas. They need the Russian economy, their neighbors. And so America is saying, let's sanction Russia, when the only country which has got the capacity to sanction Russia is Germany, because the two are major trading partners. So you got to be very careful here about what appears as if Western unity, when it is actually Germany which is being strung along by America, and Germany is feeling that maybe this is a chance to break out of the stranglehold of America. And of course, remember the big Eurasian landmass joins Europe, Asia, and Africa. That's where most of the world population is. That's where historically civilization is driven since the Egyptian and Chinese and Mesopotamian times. America, as it is today, is about 300 years, 400 years old. It's a new arrival on the global stage, and it's trying to mess up this coalescence of the European and Asian and African landmass, and because it feels thrown out there in the Atlantic. So there may be a certain amount of hubris about America finally coming to terms with the fact that it has been abusing its superpower position.
Interesting insights. So let's probably go back a bit and focus on what we're doing in Zimbabwe. Is there any sort of support that we are either offering to Ukraine or Russia at this point in time as a nation? What sort of support?
Well, by abstaining, we are definitely on the Russian side. As for Ukraine, we would want them to come to terms with the reality that they cannot. They are not a major European power. Half of one third of to 40% of their population is Russian, and they've been historically a Russian land. Indeed, Russian civilization starts from Ukraine. So it's better that there be a bridge between Europe and Asia, like what Turkey is advising them to be, rather than trying to be in a confrontation or to become an outpost of faraway America. I mean, America is about 7,000 to 8,000 kilometers away from Ukraine. There is the Atlantic Ocean. There is also the the English Channel. There is also the Mediterranean Sea. Why, for the heck of it, would Kiev want to become an outpost of America and an enemy of Russia? I cannot fathom it. It's almost like Zimbabwe trying to become to host missiles against South Africa, a major regional power, and for the heck of it, and on behalf of, let's say, a far-off power, which is maybe England or America or whoever doesn't like South Africa, and we decide to become a host of that country vis-a-vis South Africa. It's recklessness of the worst possible kind, and it has landed, Ukraine in a terrible war. And I don't see how they are going to come out of it, except to surrender and probably and possibly, accommodate almost all or in fact, they are going to be overthrown as a government now, that pro-American government. It is recklessness on the part of Zelensky, the Ukraine prime minister. Much as the Western press would like to see heroism, it's actually foolhardiness on his party, and the country is paying heavily for that.
Thank you. From where you're sitting, how are you seeing this, affecting business development in Zimbabwe? I mean, all this tension and the risks that are emerging. Just show some insights around, what you see.
We are far away from the scene of fighting. We are obviously worried when there is a war. It's difficult to know how it is going to turn out, and America for right now is wrong-footed. But this is a major power. America is the superpower of the world. It may react in a certain manner. We still don't know completely how they will. But they are nuclear powers. Russia has got a lot of nuclear capacity, and America also. So there is this very, very, very tense situation globally. We hope that peace returns very soon, and good sense keeps about not resorting to nuclear weapons. But from an economic point of view, the prices have started going up to fuel all over the world. And remember, the Arab Spring, they were caused by price rises. Both Ukraine and Russia are major suppliers of the world wheat, and they are in a war. Both the black soils of the Ukraine and the steppes of Russia are some of the premier agricultural regions of the world. Then there's the other aspect that Russia is a major supplier of fertilizers because it has a huge energy industry. Apart from its supply of, probably 20 to 30% of the world gas and petroleum, liquid petroleum. So there are aspects, and these are products which affect world populations. It's your mouth or your pump for your car. These are issues which are, after water and air, are very important for day-to-day living. So this is why this issue is very unsettling, for even for faraway Zimbabwe. And we see that it is creating ructions within our economy already, even though we are not direct importers of some of these issues. But fertilizer, definitely, the prices go up, wheat price go up, and it affects Zimbabwe. And it is, maybe that is the adjustments which are now happening in our economy. And they make the poor, who are on the bread line, borderline, they will suffer. So this is one aspect. But there's also the other one, that one of our biggest investors in Zimbabwe today, the company which is building the steel plant in Chivu, he has been he was hit hard by the movements in the nickel price, which went 400%, and there were huge losses to about 8 billion by Tsingshan and Tsingshan Group Holdings. These are the investors in Chivu, but well, they are not primarily a commodities company, a margin company. They are a commodity producing company, so they probably will weather it, and they are weathering it, and they will get support of the Chinese government in this instance. So because they are a major player in both steel and nickel, so this is another aspect which we will see pan out in terms of how our project proceeds, the Chivu Steel project, because Tsingshan is caught out in this nickel war, nickel price on the global market, because they produce it in Indonesia, and Russia is a major supplier and competitor from the Norilsk mines in Russia. So nickel needs to be watched and its impact. But look, I'm not seeing anything negative, because they are still a company before they are a margin trading company in the stock market or in the commodities market.
Interesting. Definitely, we're seeing a lot of risks, especially in terms of prices on the commodities side of things. But the question always is, Zimbabwe is sort of recovering from the COVID-19 pandemic. And of course, we've seen some growth in 2021. But the question is, how well prepared are our businesses in terms of dealing with some of the economic disturbances that can come up as posed by the Russian invasion of Ukraine? Do you think that we are sort of in a good space to deal with some of the shocks that will come?
Well, the best scenario is the war ends. Ukraine the war ends up soon. Ukraine surrenders. And I think Ukraine has got to say that it belongs to Europe. I'm taking some relief in the fact that the Ukrainian government has asked the former German Chancellor Schroeder, who is a friend of Putin, to go and talk to Putin. Maybe they begin to see themselves more as a European country than an American outpost. If that turns out, then it is the war may end up soon. But there's one unsettling aspect. This is the humbling of America, if that happens. And it means finally the American foothold in Europe is divested of. They become a strictly naval power across the Atlantic with, and if that happens, it opens up, if America is prepared to acquiesce to that, it opens up huge opportunities if America peacefully accepts that downgrading of its power, because Germany is a major economy, China is the second largest economy, then between the two of them, there is Russia with all the resources we both need. So, and then there's India on the southern side with also a big population. There are major populations in Turkey and in Iran. So it creates a new land-based world economy where Africa is also conjoined. And this has been historically the areas that have driven civilization for the past 5,000 years. So it will be a good thing if America can acquiesce to that. But it's a superpower. It spends 3 to 4 times its budget on war. And, it may not go down easily, to accept the new realities. But then, then what do they do? Do they resort to nuclear threats? Do they threaten Germany? Do they want? It's unsettling, because the country which has got to come to terms with a different reality more than any other is America. Well, the Soviet Union did come to that reality, and Russia acquiesced for a number of years, but they've now reasserted themselves. Maybe will America be? It is the if question about how America, and then the petrodollar, which was dependent on American collaboration with the Middle East countries. I'm in Dubai now. The UAE and Riyadh are the countries, and Riyadh and Abu Dhabi. These are the cities which were deciding on the price of the US dollar when Nixon decided to shift from the gold standard to the petrodollar. Now these countries are saying China is a major consumer, Russia is a major supplier, Germany is, if these countries break out of the petrodollar, and that seems to be, everybody's trying to say we can't pay for America's prolific gas. Each time we pay, they borrow, they print money. So this is another thing which is going to become very, America has to address. Is it the dethronement of the US dollar as the currency of the world? Will America start paying its way rather than print its money? And they are, the Chinese, they've got trillions of debt holding American debt. So there are many things which are of a geopolitical tectonic nature, particularly in the financial structure, which may arise out of the humbling of America should there be a rapprochement which makes Ukraine be part of Europe rather than looking across the Atlantic to far away America. America has already been kicked out of Afghanistan. They were kicked out of Vietnam. They tried to claw into the Asian Eurasian landmass. They were kicked out of Korea by the Chinese in 1952. So America's effort at trying to be at the center of the world has not been that successful now. And Ukraine may be just the last boot which is dropping out of for America. So, these are issues which have a very, very profound implications, tectonic implications in geopolitics.
Yes, I think you put it correctly to say that there are tectonic implications. Going back to the Zimbabwean economy, I think that is where the concern is, to say, yes, we're seeing all of these tensions, moving parts in terms of prices and things like that. The question is, with the policies that we have already placed and also some of the growth that we've seen over the past couple of months or so, how well prepared in terms of dealing with some of these shocks? Already, of course, we've seen oil prices have gone up. I'm talking fuel prices in Zimbabwe at the moment in terms of just comparisons with the rest of the region. We are on the high side. So why do we have so much tax and levy charged per liter on fuel and things like that? So the question is, how are we well positioned to deal with these shocks?
Well, remember, we have a very unusual economy. When you are sanctioned, and I didn't mention it earlier on about our relationship vis-a-vis Moscow and Washington. Remember, for 2 decades, we've been sanctioned by Washington. And the crime of Zimbabwe is the original sin. We formed a modern state, particularly an army, which has no allegiance to NATO. So America feels, that's why they say we're a threat to their foreign policy, because our generals, they are homegrown, they come from every family within Zimbabwe. They were not recruited by some British or French major during the colonial era. And we paid a heavy price to have an original army. We coined our own army, if I can put it that way. So that's why America says we're a threat to it. So, and anything which can make America recoil from being the power of hegemony, it is good for Zimbabwe. That's on the geopolitical level, because we've got an American put by our neck, for the past 2 decades. So that's why we cannot have. If we had been given a chance, without sanctions, we're probably the most thriving economy in the region. We're growing at 4 to 5% when in the 1990s, and the inflation factor alone of having to export through Durban rather than Beira and Maputo, a container leaves Shanghai or London for $800 to Durban, then $3,000 to get to Zimbabwe. These are the burdens which have been placed on Zimbabwe, apart from being kicked out of the capital markets, no investment. So there are a lot of issues about our economy which makes it very abnormal because of the hostility of the West. So one aspect which would come out of it is perhaps, like I say, the Ukraine war may make America recoil, come to terms with that. They are not the only superpower. It becomes a multipolar world. Then Zimbabwe can breathe. We are like Floyd George. We need air to breathe. Otherwise, the boot is on our neck. This is one aspect. But the other thing that, of course, we talk about the rise in fuels, but also the rise in gold prices. We are a major gold producer. Gold is a major contributor to our economy. When generally commodities go up, up. There are some ways Zimbabwe plays, we are still a commodity-based economy. So there are some aspects which may look good. As long as gold is going up, it means more money to Zimbabwe. It also means more money. If palladium goes up and Russia is a major competitor and Zimbabwe is a supplier through PGMs, then we also get a windfall from the other side. So it's one aspect balances off against another. But look, the topsy-turviness just makes it very difficult for a small country landlocked for us to know exactly where we go because of this unsettled situation. I'm hoping that it comes to closure very soon, particularly if Ukraine can say it is sandwiched between Germany and Russia, and they find an accommodation with their nearest neighbors before they look for respite from a faraway America.
Thank you, Honorable. Very, very interesting insights there. So my other questions really around the agricultural sector in Zimbabwe is quite key, as you know, because there are food security issues and things like that. So recently we've seen the GMAZ announcing price increases in terms of maize and wheat, by over 15%, citing the effects of the war. But just help us understand, are we not coming from a bumper harvest last season, and can the reserves not sustain us, at least for the meantime? Because, I mean, the price shocks have been quite huge over the past couple of days. So just help us understand, the dynamics on that front.
Even before the war, I think the government had decided to say the private sector should start importing their own maize. So yes, we had a bumper harvest, but it's only one season. We've not had a sustained, bumper harvest. The drought is, the crops are shriveling. We had 1 month of rain in January, and the things have not been that well since. We have to make contingencies of maybe using our dams and investing in irrigation to try to reduce our wheat, to raise our wheat irrigation capacity. So, we were still very fragile. Our agriculture was exciting, but very fragile. So, I can understand the government beginning to hedge its bet. And then, of course, the issue is that two major producers of grain, Russia for wheat and Ukraine for both wheat and maize, are being yanked off, one by sanctions from the West, but the other one by war. And then we know there are big consumers like China with huge populations. There are countries like Egypt, there are countries like Pakistan. They have got much bigger populations and more resources to buy wheat should push comes to shove. So we see Zimbabwe being marginalized, but then maybe there is also South Africa, it may have excess. So these are, we know, but what it does is it creates an unstable environment. I'm not in government. I'm much more outside, the details would really require the Minister of Agriculture, but I'm just throwing all the pieces into the air so that people can look at what could be the dynamics of this situation.
Okay, so thank you. So the concern is really around food security as a nation. Obviously, there's now a risk because of these geopolitical issues. I mean, what's the plan? I mean, of course, you said you're not in government, but from what you're picking up, what's the plan in terms of averting some of these risks around food shortages? What's the position at this point in time?
I think the government, the fact that the government is retrenching its dominant position in food production, and with what has been happening in our financial sector since the domestication of the currency, in 2020, June 2010, with those statutory instruments, there's much more confidence by the private sector to play an active role in food production. Because when the currency was unstable, it made it when the currency had a one-way ride southwards because of what was happening, the ZSE stock exchange, with the old mutual implied rate, and also Econet, EcoCash, having their own private currency, national currencies. These things have somehow been, reined in, and so there is a new confidence in the private sector, and the government, President Idi Mnangagwa, seems to be now prepared to give more latitude to the private sector. If we can have those resources be brought into play, it would help. Then we have an economy which is much more normal, with the private sector being the driver of growth and government being the facilitator through regulation, because that seems to be the best way out of the present challenges which we have. If we can somehow continue to control our foreign currency side as the main source of currency instability, then maybe there's more room to recycle some of the idle money, like the 2 billion nostrils, into the economy to much more productive use. But look, there are other issues. If the peace comes quickly and we become a major steel producer, and because we are going to a position where we may be like Turkey, going from 0 to even 20 to 30 million tons of steel production within the next 5 to 7 years. This will be a good thing. So again, it's the private sector which we need to revive our infrastructure side, to revive and the mining sector being the main component, because it is in mining where we win the global Olympics of recognition. Our mining deposits, be it PGMs, be it, in the region, we are already a major producer of coking coal. We have cleaned the Chinese coke exports out of the region. Now, so Zimbabwe, through the investment, some of it by Chinese, a lot of it by Chinese companies, has now become the dominant coke supplier. We hope it continues like that. Then there's also, investments in ferrochrome, and then there's the lithium sector. With the new energy vehicles coming in, there are already 3 major deals. Can you imagine in the history of Zimbabwe a deal of $400 million US? It was unthinkable. And the idea that, Old Mutual is the biggest company in the country is now being challenged as mining majors from across the world take an interest, and particularly the Asian ascendants in the electric battery sector. There are about 95 electric battery manufacturers in the world, 90 in China, 4 in America, and 1 is being built in Europe. So these are the lithium sector. Could, if there's stability on the global markets, if these superpowers don't end up, blowing us out through nuclear warfare, then there's also the question of the yuan becoming perhaps a currency of importance, and with crypto, with the digital central bank digital currency coming in, a lot of trade between Russia and China with 4,000 kilometers of border. It means that they may bypass the American system completely. There's just no infrastructure, not sufficient infrastructure between the two countries, but the capacity is there. And also there could be a reorientation by Central Asian countries with population like Iran, Turkey, towards becoming part of a new bloc. So these are things which will be washed by which makes Zimbabwe babes have a more breathing space if there can be peace, and if America cannot violently react to the reduction of its power. So all in all, I see the reduction of American power giving Zimbabwe, like I said, taking the boot off Zimbabwe's neck. Zimbabwe can breathe before it dies, like Floyd George.
Okay, thank you very much, Honorable, for that. So we were moving to the second segment of our webinar. I'm going to be sort of introducing our in-house analysts that cover different sectors and some of the companies on the Zim equities market. So the question I'll direct it to Tinashe, one of our analysts. But feel free to come in, Honorable, when you probably want to add on 1 or 3 slides there, especially on the economics and politics side of things. So the question is, how will this conflict affect the agricultural sector, given that it's a key sector in the economy, and also which companies will be most affected? Tinashe.
All right, thank you, Badnai, and thank you, Honorable Mzanga. I think you guys in your previous discussion actually mentioned a lot about the economy and the different sectors that will be affected. So, of course, like you said, agriculture is a very important sector, and of course, everyone wants to know how will it be affected. I think one of the big things we see, especially for companies being affected, are going to be the top lines in companies such as CFI, NAV Foods, and other companies along the supply chain, such as your imports. because again, increasing, say, commodity prices, especially your wheat, will obviously see these companies benefit in that kind of sense. But then conversely as well, coming out of the COVID pandemic, seeing inflation and seeing oil prices rise, we're probably going to see, reduced margins, because obviously fuel prices going up affects a bunch of industries, affects all industries actually, and also affects industries with heavy machinery, which obviously includes the agriculture sector. And again, as you guys mentioned before, this season hasn't been as fruitful as, say, last year. So again, there's going to be a lot of mixed effects and in the bag going into sort of this specific agriculture sector.
Okay, so from what you are saying, there's going to be an impact on margins simply because we're seeing pressure on energy, right? And also raw material prices. But can you also comment on the disposable incomes? How do you expect those to play out?
Yeah, so the way I see it, especially with disposable incomes, you find that the agriculture sector tends to mostly be, consumer non-discretionary. So as much as prices of things like fuel and other things goes up, I think disposable incomes won't have as much as effect on the agriculture sector as they would on other sectors that are especially, consumer discretionary, where people don't have a choice. And then at the same time, these agriculture companies have the ability to pass on their costs. So even though margins might decrease, you might still just see them passing on their costs on to us, the end users, who will see price increases in the things we buy in store.
Thank you, Tinashe, for that. I'll direct the next question to Jafar. How will this affect the financial services sector? So of course, for a long time, Morgan & Co. research, we tend to like financial services, given that, we see some opportunities from a valuation standpoint. And also the question is, with the banks, is exposure to the agricultural sector an issue, given some of the dynamics that we've covered? Jafar.
Thank you, Batanai. So the banking sector in Zimbabwe is, and the loan book in the banking sector is largely exposed to agriculture. And what we're saying is, before this Russia-Ukraine war was in play, we're already seeing some threats in terms of sparse or erratic rainfall affecting the yields that we're expecting this year. So I think, given those elevated risks that were already at play before the war, the culmination of everything that's happened so far between Russia and Ukraine has led to the strong prices in wheat and maize, and Zimbabwe being a major maize producer. We are likely to see farmers, maize farmers, wheat farmers, seeing a reprieve from the erratic rainfall. So we think there's going to be some cushioning, from a price perspective, and also considering that the government has also increased the price for the farmers. So there's going to be some kind of reprieve, and that will sort of cushion the ability of, the loan book, not to prevent any increase in non-performing loans and the like. So we think while the loan book is exposed to what's happening in the agriculture sector in Zimbabwe, we think it would be resilient because of the stronger prices that we're seeing. We also know that the banking sector, after what happened in 2019 and the changes in the economy, some of these have really strengthened their real asset book. So in terms of having investment properties, which are generally accepted globally as an inflation hedge, I think that will be a huge, strong investment case for the financial services sector, considering that the increase in oil and other commodities is going to result in a ripple effect that will also permeate into Zimbabwe's inflation. So I think having a good hold on real assets is going to be key going forward, as we see how this Russia-Ukraine war unfolds. But we see some risks. I think the coming in of global inflation through local fuel prices. I think that could disincentivize businesses, financial services companies, from continuing the loan issuances. We're seeing that businesses, these financial services companies, had once stopped issuing loans because of inflation, but now because there was a slowdown in inflation for the past couple of months, the loan to debt ratio had been, the figures were strong in the last couple of months. And we think that when this global inflationary fears, start threatening stability again, we think this could stop the financial services from actually continuing that aggressive loan to deposit ratio that we've been seeing lately.
Okay, so thanks for that. Just another question. Okay, what specific sectors do you think will be most affected by this conflict? And also, which sectors or entities do you think will be more resilient throughout this conflict? Just to help us in terms of strategy, where should we be placing our money or focusing on in light of this conflict?
So what we're saying is, on the stock market, generally, Zimbabwe doesn't have many options for storing, value other than, the stock market. So there are some sectors on the stock market that we think could be resilient. And while I don't want to say it's one specific sector, but there's some characteristics that we're looking for in the different sectors that we say, some investors should be putting their money in this sector. So one of them is sectors that have a good inflation pass-through ability. What we mean by that is we're looking at sectors that can pass through that global inflation effect to the end user with marginal effects on their profitability. We're also looking at businesses that are defensive in the sense.
Yeah. Okay. Do you hear me now?
Yeah, we can hear you. You can go ahead.
There is one sector I just want, before I forgot. There's one sector which needs attention. It is the fertilizer sector. Remember, Russia is the biggest supplier of fertilizers on the global market. And there are two aspects. One, whether the shipping companies can be allowed. Then there's the payments for the fertilizer now, with America threatening Russia left, right, and center. That's why Germany is already crying out about don't kick. The biggest German bank says don't kick Russia out of the SWIFT payments system. But maybe it also could be a time for Zimbabwe to use bilateral diplomacy with Russia. I know they are busy at war, but they are beginning to choose who they supply their fertilizers to. If you are not friendly, they ban you. If you're friendly, they supply you, because they know their pivotal position in the world, in the global fertilizer market. So that one, and the fertilizer is important. We are a net importer of fertilizers for our agriculture. And the season, we have two seasons: the winter season and now the summer season, the winter season for wheat. I mean, so this is one area where we need to be very careful and be watchful, whether we take advantage of our bilateral relation with Russia, and whether we'll be able to do so. And secondly, whether the world global shipping system can allow that to happen. It's an iffy question, but I'm throwing that in. Thank you.
Thanks, Honorable, for that. I think you also touched on something interesting. You highlighted the gold price increases. Say that it's also a positive. But the question is also, will that outweigh the negative effects of a general decrease in disposable income? Tafara, can you take that question to say that, yes, we're seeing that PGM, gold prices and the likes will also increase. Will that outweigh the negative effects of the general decrease in disposable incomes?
Okay, so there are more direct transmission effects, that are really apparent from, to say if there's an increase in the price of gold, what exactly happens to any Zimbabweans, pocket or disposable incomes. But maybe I'll break it down from how we see this, playing out. So stronger gold price and PGM mineral prices, I think these are really good for the mining sector. And overall, we know that, the Zimbabwe's current account balance is largely driven by the receipts from the mining sector. So the strong prices that we're seeing lately, I think they're going to be very critical in maintaining, sustaining the current account surplus that we've been seeing. We also think that could also go a long way in supporting the foreign interbank market. But from there onwards, it becomes quite cloudy, and it really depends on how from there how's the money from the interbank is utilized. But if it is used efficiently, I think we could see some sort of positive transmission effect, where that money could be channeled into productive assets and productive businesses, which in turn could improve employment figures in the country and generate disposable incomes overall. So that's what we're seeing. But we can't neglect the effect of the agriculture sector, which is the largest employer in the country, and the high risks that we're seeing could offset these potential positive transmission effects.
So net, what's the impact? Are we saying it's positive or it's negative? What's the impact of this whole conflict?
I think in the short term, it's going to be quite negative. But I think in the long term, things could change.
Okay, so we move on to our next question to say that besides the increase in fuel prices, where else can we expect to see some pricing pressures because of the war? Of course, in the past couple of days, the conversations were around petrol prices and the like. Where else should we expect to see pricing pressures? Maybe I can give that to Gabriel Monday.
Thank you, Bajanai. So I think this is what has been discussed before. I mean, price increases, we mostly see them from areas that from sectors that are mostly dependent on imports from mostly the Russia part of the world and Ukraine. So already before we had mentioned that bread prices will increase, grain prices maize seed will increase. So these are some of the areas that we see that are being affected by this whole crisis. So just to sum it up, we are mostly talking of the fuel prices, we're talking of gas prices and your grain prices.
Honorable, you can go ahead. I can see you raise your hand. Go ahead.
Hello?
Yes, go ahead.
Yeah, there is also another aspect which you haven't addressed, which is the insurance industry, the services sector. All these trades, the trade in physical goods, which we talk about, they also require the support service, the financial services, the insurance. And look at what's happening with Lloyd's of London. If suddenly all the planes in Russia are now detained, and then Lloyd's have to have a $10 billion bill for claims. Then there is also the shipping companies. So they are the whole machinery, the oil which oil the world trade, the financial services sector that support it. These are also imponderables which we have to face, and we are on the receiving end. We are a price taker in these issues. Whatever is decided, it has to be passed on to small countries like Zimbabwe, more so when we are a landlocked country. So, we really want to hope something gives, in this peace very quickly. But anyway, there are countries within the neighborhood, like I say, Germany, which has got both, which will be affected both by the physical goods, we had goods of global trade, but also the services which support which oil that kind of trade. So we need to factor that.
Thank you for those insights. Probably to the analysts, of course, we're now seeing pricing pressures, which means inflationary threats have come to the fore again. So from an investment point of view, do you think that the Zimbabwean equities market, is still relevant in terms of, hedging against these current geopolitical tensions and also some of the inflation risks that we're seeing? Maybe Cornelius, if you're on the line, you can just talk to us around that.
Thank you, Batinai. Thank you, Tafara, Gabriel Tinashe, and the Honorable for the wisdom, insight, and education. I generally think the equity market is the best liquid hedge you can have against inflation. And we did see this last year when we had average inflation of about 160%. The ZSE also index went up about 314% in that same period. So that's an almost double the increase of inflation. So I do think investors should look to the equities market if they want a liquid hedge. Because properties, yes, they are a great hedge, but putting your money into property at this point in time, unless you get the mortgages in RTGS, it doesn't make sense. And most banks are giving them in USD in the first place. So your real value is being deteriorated because your money is locked up. So I do believe, as Tafara pointed out, people should put money into the financial services sector. The Morgan & Co multi-sector ETF gives great exposure to that sector because it is basically financial services based at this point in time, because we see a lot of value there. And I think looking at stocks that are good pass over for inflation, such as your InScore, which they dominate the FMCG market very much so, probably have about 70% market share. So these costs in wheat, grain, stock feeds, which feed into the poultry market, can be passed on quite easily to the end consumer without demand being too affected. I think investors should look at those sort of defensive stocks and stocks that can weather the storm going forward. Thank you.
Thanks for those insights, Cornelius. But also going back to the economics, I think, Honorable, you can also come in here to say, what can the central bank, RBZ, do to address these inflationary pressures? Of course, some of the risks that we put out in our 2022 economic outlook was to say that there could be a risk of government, budget overruns, given, of course, that we're approaching an election year in 2023. And, on the part of the central bank, given this, global inflation that's, playing out, how best would they manage some of these pressures going forward? Honorable. Maybe one of the analysts can address that question as we wait for the honorable to answer.
I think in terms of RBZ addressing the inflationary pressures, as Tafara pointed out, it would depend on the timely disbursement of the mining proceeds, because we do see commodity price pressure upwards going forward this year because of the Russia-Ukraine conflict. But the biggest question is, would this foreign auction backlog be addressed in time? And if that is addressed in time, most companies will receive USD in time, and they'll be able to fund their imports, and we'll see more USD funding through the system for the purpose of input generation, which then helps output. And then we should see inflation going down through there. But I don't really see much inflationary pressure going down going forward. It'll be very difficult.
Anything that you want to add on strategies to deal with inflationary pressures?
I think, inflation, global inflation, when it comes to Zim in this case like this, I think RBZ has to focus on supply side pressures. So I think just taking it from that end and just making sure that, when inflation comes in, they can contain it before it's fully transmitted to the end consumer. I think in doing so, they could really do so much in protecting the average Zimbabwean's wallet from value erosion. So I think just putting in place facilities that allow business to be hedged from the inflationary effects, which could include the ability to access foreign currency on the interbank and not from parallel market activity, which we've noticed is quite severely exposed to this global inflation trends that we're seeing.
Yeah, Honorable, I can see that you raised your hand.
Yes, you see, inflation in Zimbabwe, what are the main drivers of inflation in Zimbabwe? It is the foreign currency market, whether, like I mentioned earlier on, it comes from manipulation through the stock exchange or formally from the network, mobile network operators. That's where inflation comes. You can even see it today. Everybody uses the ETF from the Zimbabwe Stock Exchange as an escape, as a value protector vis-a-vis the central bank's auction rate system. So, and we need to distinguish and to really go to what are the fundamental drivers of inflation in the Zimbabwean market, and those are the things which I have mentioned. And anyway, with what's going on now with Ukraine and China having bolted ahead in the central bank digital currency market, we may see a situation where the banks all over the world begin to go digital, and that again is an impact on the US dollar as because remember 70% of the world trade, 70 to 80%, if not more, is done in US currency. But if this war changes that, where the yuan or the central banks go for the digital currency, it may speed up, the dethronement of the US dollar, and its impact is the main driver of inflation, particularly in Zimbabwe, is lessened. So these are the imponderables which may be unexpected out of the situation where we are now, the rapid rise of the central bank digital currencies from various national jurisdictions. I know for certain that the UAE is collaborating with China on to try to evade the American sanctions. I know Turkey, which has been suffering from again induced inflations, has been doing the same thing. I know Thailand has been. So there could be a speed up move because of the impact of this war to central bank digital currencies, which then means the foreign currency risk is spread out beyond the US dollar. Thank you.
Thank you very much, Honorable, for these insights. To conclude, Tafara, probably just give us an appropriate investment strategy for investors on Zimbabwean capital markets. What should they be doing now?
Okay, so I'll reiterate what we've just been saying. What would you recommend investors to do, in light of the Russia-Ukraine war, is to look for companies that are fairly hedged from inflation, and companies that are very resilient and defensive. So, in addition to that, I think you also want to look at companies with a good holding of real assets like property. Those tend to preserve value or hold value during times of inflation. So we're looking at stocks like Delta, Mickles, Inscore, OK Zimbabwe, for their good inflation pass-through ability and their defensive nature. And we're also looking into financial services, especially from the standpoint that these businesses have extensive holdings of real assets, which can weather the inflation effect in coming from the global inflation that we're seeing now.
Thank you. So of course we move on to final part. We will just open the platform for questions from participants. Feel free really to use the chat platform if you have any questions or areas where you need a bit of some insights. Feel free to use the chat platform. We'll be able to address some of your questions. Okay, so there's a question from Tabo. It says the VFX is a very stiff market, but should we expect it to move now that mineral commodities will be appreciating? So I guess it's just trying to say that it's not a liquid market currently, given, of course, the number of shares on that market, but also we have commodity linked companies on that exchange, Padeng and the like. So should we expect some more action on the VFX as a result of the price trend? Anyone to address that from the analyst side?
Okay, so VFX, we're seeing the exchange holding equities that are heavily exposed to the commodities prices that we're seeing globally. So we're seeing, BNC and Padenga being companies, as well as Caledonia, being companies that are exposed to the good prices that we were seeing. I think it will be a matter of how well these companies can take advantage of this these prices. That's one thing. But what we also need to consider is, some of these businesses have been, lamenting the disparity between the rates that they get when they sell the forex proceeds and the rate that they effectively incurring in their OPEX. So, while they have the good prices that they are selling their product for, we are also seeing some really significant threats on margins. So this could be offsetting. So it's something that we continue to monitor, but we are quite pessimistic on the positive effects of the strong global commodity prices on these companies on the VFX. So I think maybe Caledonia would be the best pick for us, considering that it is virtually not exposed to local macroeconomics, significantly compared to the other players. And then, we could look at BNC and Padenga, in that order.
Okay, so in terms of my comment on the liquidity aspect, of course, this is a fairly new market. We have a limited number of counters that are trading on the market, but we think that the introduction of more financial products will be quite exciting, especially if you can consider things such as gold ETFs and things like that. That will stimulate interest and also boost the visibility amongst institutions as well as retail investors. So that will improve the liquidity of that market. So if there are no further questions, I'll go back to the Honorable. Any closing remarks that you might have? And of course, we appreciate your time in terms of giving insights on this very important topic. I think it helps in terms of shaping our strategies, even from an investor or even business strategy point of view. So thank you very much. Please, if you have any closing remarks, we'll be happy to sort of hear that and before we close our session. Over to you, Honorable.
Well, I just think that let's watch the situation in Ukraine. I hope it comes to closure very soon. But whichever way it goes, it's a tectonic shift, in global relations. It will affect the evolution of the dollar as the dominant currency of the world. It will definitely bring about a rapid march towards central bank digital currencies. It will realign with Germany, which, remember I told you about NATO, that the original NATO position keep Germany down. It may actually make Germany and lead to the revival of Germany and Russia becoming, the center of power will shift from the naval powers, which are France, England, and of course America, starting from the time when Portugal went around Africa and Christopher Columbus went to Europe. Then the naval ascendance happened, and it was at the expense of Genoa and other, land-based trading princedoms of Europe. But now with what has happened now with Ukraine, if Russia comes out top militarily, we see a restoration of the land powers again, and a shift of power away from the Western Hemisphere to the Eastern Hemisphere, and of course a new alignment between Africa, Asia, and Europe, which is also the home, like I said, of the biggest number of human beings on the world. Maybe we're on the verge of a new prosperity ahead of in history because of land-based trade between these contiguous countries, which have always, continents, which have always been central to human civilization. America is an aberration. That's what I'm trying to say.
Thank you, Honorable, for those interesting insights. I would like to sort of appreciate your time on behalf of Morgan Research, and also some of our clients that are participating in this webinar. I think this is enlightening. It helps us in terms of just mapping out strategies, but also coming up with appropriate recommendations for investors out there. So thank you very much, Honorable. We really appreciate that. But let me also highlight that our webinar was sponsored or supported by Muba Money, which is basically a company that does remittances and also international transfers. So we want to highlight our sponsors. Of course, going forward, we expect to do more of these webinars covering different topics really affecting our economy, affecting our capital markets. So that concludes our call. Enjoy the rest of the weekend. Thank you.
Thank you very much. Thank you very much. Thank you for the invitation.
All right. All good. Bye-bye.
Thank you, guys.